Hello everyone, my name is Mohammed Aljaber and today we are going to look into exercise 6-1A of Managerial Accounting course. Let's start by reading the question together. This question says, Gayla Ojida is trying to decide which of two different kinds of candy to sell in her retail candy store. One type is a name brand candy that will practically sell itself. The other candy is cheaper to purchase, but does not carry an identifiable brand name. Ms. Ojida believes that she will have to incur significant advertising costs to sell this candy. Several cost items for the two types of candy are as follows. As you can see here, we have the brandless candy information, the cost per box, sales commissions per box, rent of display space, and advertising. And on the other side, we have the name brand candy. Again, the cost per box, the sales commissions per box, rent of display space, and advertising. What is required here? Identify each cost as being relevant or irrelevant to Ms. Ojida's decision and indicate whether it is fixed or variable relative to the number of boxes sold. Okay, so we're gonna go over these and decide for each one of them if they are relevant information or irrelevant. And we're gonna decide whether they are variable or fixed cost. So let's go over it together. What I'm gonna do is I'm going to draw or set up a table here where we're gonna list each cost item and then decide its relevance, and then we'll call the third column behavior. Starting with the first cost item, the cost per box. Now the cost per box here is $4 for the brandless candy, as you can see here, and $6 for the name brand candy. What that means is that if Ms. Ojida decides to go for the brandless candy, she's going to incur $4 as a cost per box, but she will not incur the $6 and vice versa, right? So from there, we can see that this specific cost item is definitely relevant. So call this a relevant information. Now, of course, since the cost is per box, we can clearly see that it is variable, not a fixed cost. And the difference here, of course, if you don't have a background in accounting, the main difference between fixed and variable costs is that fixed costs do not get affected by the manufacturing level or the production level of the business. So regardless of them, let's say, in this case, Ms. Ojida, regardless of her selling 10 boxes or 100,000 boxes, a fixed cost will not be affected. However, a variable cost has a direct relationship to the number of units sold by that business. So if she sells 10 boxes, for example, here, she will only spend $40 on the cost per box item. But if she sells 100, that cost is going to jump to $400 and so on. Okay, so that means this is definitely a variable cost. Right, variable. Moving on to the second cost item, sales commissions per box. We'll write it down. box. Now, this is also a variable cost, and of course, typically with a variable cost, you would see this term here. So normally, if you see any cost item that says per box, that means that cost is directly related to the number of units sold, and that means that it is a variable cost. Okay. However, here, since the variable cost of the sales commissions per box is the same under both scenarios, so it's $1 under the brandless candy and $1 also if Miss Ojeda decides to go for the name brand candy. So that means she will incur the same exact cost whether she goes for alternative A or alternative B. And this makes this specific cost item irrelevant. Why is it irrelevant? Because it will not change under both scenarios. So it will be the same. All right, let's move on to the third cost item. Rent of display space. Under the brandless candy, the rent of display space is going to be $900, and under the name brand candy, the rent of display space is also going to be $900. So because under both scenarios, that specific cost item is going to be the same, that makes it an irrelevant information. However, is that cost variable or fixed? It's definitely fixed. The reason being is that Miss Ojeda is going to be paying out this amount regardless if she sells 100 boxes, 200 boxes, 3,000 boxes. It's not going to matter. That rent is going to be paid exactly as it is, regardless of the number of boxes she sells. Even if she doesn't sell any boxes, she's still going to be paying that amount. Okay, so that makes this specific cost item a fixed cost item. Finally, for the last cost item, advertising, let's write it down. Under the brandless candy alternative, she's going to spend $3,000 on advertising, whereas under the name brand candy, she's going to spend only $2,000. Since the candy is of a known brand, she's not going to have to spend as much advertising that specific candy. Hence why the advertising cost is lower here. Now, is this cost item relevant or not? Yes, absolutely it is relevant because it's different under both scenarios. So if Miss Ojeda decides eventually to go for the name brand candy, she will avoid this specific cost. That's why we call it avoidable cost. And she will have to pay only this cost, and vice versa. So that means this cost item is relevant. Now, is it a variable cost or a fixed cost? Let's consider our analysis again. If she pays this much on advertising, say $3,000, if she decides to go for the brandless candy, is that payment going to be different whether she sells 400 boxes, 600 boxes, 10 boxes only, or so on? No, that advertising cost is still going to be the same, regardless of the number of boxes that Miss Ojeda eventually sells. Okay, So that makes this particular cost a fixed cost. That's it for this exercise. Hope you found the video beneficial. I'll see you in the next one.